Hey guys, how's it going? So, this video is going to be about iAnthus and why I think it's worth the gamble. Just be aware that iAnthus is a very high risk, high reward kind of play, in my opinion. And if the company can make it through legalization, I think their stock will explode. Why? Because I think that iAnthus is the perfect acquisition target for a Canadian company to take a big footprint into the United States. I think that once the United States is fully legal, and as long as iAnthus is still in business and they haven't went bankrupt or are forced to disband because of their debts, because they have a lot of debts, and because of that their stock, they couldn't make their payments, but their stock went from 30 cents all the way down to 8 or 9 cents because it got halted because of some news regarding them not being able to pay their debts, and the stock fell really dramatically. And that would have been the perfect time to pick up some shares at 10 cents. Right now the stock is kind of at 34 cents, and it could drop all the way down to 25 cents or lower. I don't know where the stock price will go, but the lower and lower the stock price goes, the higher the risk to reward ratio it becomes. And yes, I am a shareholder, and yes, I am bag holding a little bit on this stock because my average is around 34 cents ish. So I don't know if I'm break even on this stock. So, and if the stock price drops down lower, I'm going to be buying it on a different account. That's my plan moving forward. Right now I only have it in one account. I'm not going to share you my position or how many shares I have, but this is a stock that is part of my diversification of risky high growth stories. But I do think that this is a very attractive acquisition target. It gives, like, if United States ever become federally legal, I bet you anything, there's going to be a lot of MJ companies looking to acquire out iAnthus because of its attractive assets. What I mean by attractive assets, well, this is the OMMU update from this one gives you the Florida updates. If you can look, right, they are under their Florida company is called Growth Health. They have right now currently 17 dispensaries, and as you can see, they're selling 5,800 mgs of THC and 3,399 ounce forms of for smoking ounces. I think that Florida is one of the most attractive assets. And if we look at liberal health science, they have 31, but they are selling a little bit more on the MGS THC, and on the ounces, they're selling a little bit less than Growth Health. But they also have twice as much dispensaries. They have 31 dispensaries, while Growth Health only has about 17 dispensaries at the moment. And this was an update on between March 19th to March 25th, 2021. Things can fluctuate week over week, but if we look at I feel like the Growth Health business will dramatically increase once federal legalization happens in Florida. And then we look, this is off of the Liberal Health Science website, Facebook page, but we can see this was for March 5th to March 11th, 2021. As we can see, Growth Health had 12,500 mgs and 3,711, which destroyed Liberal Health Science's numbers for that week. So it can vary week over week, but Growth Health did pretty good for that week, considering the fact they only had 17 dispensaries and Liberal Health Science had 31. And we had Columbia Care. They destroyed Columbia Care. They destroyed MedMan. They destroyed GTI. They destroy Harvest Health, you know. So, but Harvest Health only has 6 dispensaries. And so the Florida assets are very attractive for liberal health science, and the fact that right now their current market cap is $58 million. So Florida assets are very nice, and then this is just proof that this is their Florida assets. iAnthus Capital Medical, MJ Business of Growth Health Holding, marking full-scale entry into the fast-growing Florida market. This was on January 17th. They paid, let's see, hold on. They paid $17 million in cash and $35 million. $30 million was satisfied iAnthus common share at a price of $2.52. The cash position of the considered acquisition included purchase by the company of the right to use a $5 million performance bond post with the state in connection to insurance of license. So they paid $50 million, almost $50 million to acquire the Florida asset. And right now the Florida asset has 17 dispensaries and quite a bit of growing space. So once Florida becomes legal, I think iAnthus would benefit big time. But iAnthus is all about survivability right now. Unless, there's 2 scenarios that will happen. Either, some big company comes in and decides to buy out iAnthus Capital and merge with them, and that will take care of their debts. Or number 2, retail investors and big money comes in and pumps iAnthus stock to the moon, giving them the capital to pay back their debts and continue to grow as a business, continue to expand in the Florida locations, build more stores. Those are the 2 scenarios that could happen, but iAnthus is a really attractive acquisition target. Have really attractive assets, but the only problem is they have a lot of debt too, and right now shareholders don't want to pump their stock. So I'm buying their stock in speculation that maybe New York legalization will help boost the stock price. But and then we look at all the assets. This is the annual report. As you can see, they're in Arizona. They have 4 dispensaries, 8 cultivation, 8 processing license. They're in Florida, 1 cultivation, 1 processing. Right now they have 14 dispensaries, but there is no dispensary caps. Maryland, they have 3 dispensaries and 1 processing license. Massachusetts, they have 3 medical dispensaries, 3 adult use dispensaries, 3 adult cultivation. Nevada, they have total of 3 dispensaries, 1 cultivation, 1 processing. New Jersey, they have 3 dispensaries, 1 cultivation, 1 process, and I believe they were lent $11 million to continue to build the New Jersey assets. So the company is struggling on the cash front. And then on their New York location, they have 4 dispensaries, 1 cultivation, 1 process. New York is going to be legalizing here very soon. So that could be a positive catalyst on it. And they have Vermont, 2 dispensaries, 1 cultivation, and 1 processing license. So yeah, they have very attractive assets. They are a multi-state operator. And this is the investor presentation on February 2020. I don't like the fact that they are not updating the investor presentation. But, the company is struggling internally right now. But that's the reason why their stock is so damn cheap. $58 million. So they could easily 10x your return on investment if big money decides to come in and pump the stock to the moon, which is a possibility in the future. So, we'll see what happens. I'm gambling on the stock recovering, but at the end of the day, retail investors don't control the market. It's big money. So if big money wants to pump the stock to the moon, it's their choice. But, right, like, this is the presentation. This is what I find the most attractive. They have 817,000 square feet of growing space. They have a total, they can open up a total of 73 dispensaries. And then if we scroll further down, we can see that, hold on. We can see some of the locations. These are in Florida. They have their New York locations, Brooklyn, New York, and then Massachusetts, Worcester. So the dispensaries look kind of nice, but these are architecture renders only. And then we scroll further down. What I find interesting is the Florida production. This is Lake Wales, Florida. They have a total of 150,000 square feet of production space, 70,000 square feet of outdoor, and it's expandable up to 400,000 square feet. The lowest cost cultivation, 70,000 square feet of outdoor cultivation. And as you can see, they're selling more than liberal health science. They have a greenhouse, so just saying. And then they have cultivation in Nevada, Arizona, and Massachusetts. So, and they have a total of 817,000 square feet of growing space, which is a lot. So, it is what it is. Maryland is cash flow positive. But then we scroll further down and we look at the share capital structure, which is the most important. Right now, they have a total of 171. This is as of February 2020. They have 171.6 million outstanding shares, $49.2 million of warrants. But the warrants could expire worthless, and the options could expire worthless. And then they also have 56.6 million of convertible securities, which if they converted that would get rid of a lot of debt. And they have a total outstanding share. If everything gets exercised, they would have a total outstanding share of 297 million. But if everything got exercised, the company will have a lot more cash on the balance sheet. They would have a lot more. Convertible. The debt would go down dramatically because they'll be converted into shares. So I don't know. I still think that it's a very attractive acquisition target, especially sitting at $58 million. So, that's what I think. I think that iAnthus is a really attractive acquisition target. It's the cheapest MSO right now, but at the end of the day, I don't control the market, and there's a chance that we could see this thing drop all the way down to 10 cents. Just letting you know. So, high risk, high reward kind of play. So we'll see what happens. It does have a death cross right now. So, and the stock went as high as 59 cents. So we'll see what happens. But anyways, that's it for my video. Thanks for watching. Subscribe for future updates and have a great day. Bye.